Welcome back. Thank you so much for staying tuned in. Well, let's kickstart the show then and kickstart taking queries. In fact, we do have Kunal Bothra also joining us. And on your screens, you can see the number where you can also write to us. Do mention the buy price for the stocks that you're already invested in. Also mention the time horizon for the stocks that you're hoping to invest in. But with that, let's take the first query in the show then. And that is coming in for Reddington and Polycab, Kunal. We do have Venu who's writing to us, who's a senior citizen writing to us from Chennai actually. Wants to know about Reddington, 500 shares, 217 is the buy price for this one, and for Polycab as well, 25 shares, buy price is 6,800 rupees.
So, good morning. I mentioned, I think, few days back about Polycab that I'm expecting the stock to fall below the 6,000 mark. I think it was at 63, 6,400 at that point of time. The stock has come back to 5,500 levels, but it still looks like that the stock has not, or the selling is not eased off for Polycab in the very near term, and there could be a possibility that the stock may drift, a few more percentage points lower. So if you're looking to hold on to the stock, just hold on, but I would not suggest to average at current levels. Reddington, on the other hand, this is the first day after months of the stock going into a series of outperformance, where you're seeing the stock under some bit of selling pressure. But it looks like that it could probably be a short-term led selling for Reddington, and maybe the stock could bounce back pretty quickly once the market sentiment starts to improve. So hold on to both of these names as of now.
All right, this next query that is coming in from our viewer Ahuja, who wants to know about two shares. That is, one is a PCBL, which he has about 150 shares at a price of 430, and VA Tech Wabag at 75 shares at a price of around 1,700 rupees per share. He's a long-term investor. He wants to know whether it makes sense to go ahead and add some more in his portfolio at this point in time. What's your take on both of these counters? Actually, 430 buy price coming for PCBL, and for VA Tech Wabag is 1,700. Rajesh.
Good morning, everybody. As far as PCBL is concerned, we have been very bullish on this stock, and we have been recommending since a very long period of time. It's a very good buy at these levels after the kind of correction it has witnessed. In carbon black, it's one of the leaders, having 4 plants, and all of the plants having their own power grids, power generation. So whatever extra power they have, they sell it to grids. So that's an added advantage. They have expanded into chemicals also. They have taken a chemical company, acquired a chemical company. And the valuations are also very attractive. So one can add PCBL at this point of time. Wabag, they are a big player in water segment, and that is also doing very well. In fact, it's one of the biggest company, I would say, in this segment. One must wait for maybe around 1,000 odd rupees to buy new into this, but existing holding you can continue to hold. Wait for Watek for some amount of correction. PCBL is a buy from our side.
That's the recommendation coming in as far as Vatek Wabag then is concerned. Kunal, I'll come right back to you. And Rajesh, firstly, good morning. I wish missing you earlier. And I wanted to take the next query then with Kunal, because IRCTC is the stock that Jaidev Appa is writing to us about from Bengaluru. Wants to know if he can look at it for a fresh buy at this point. He's looking at a long-term horizon. Kunal, what do you make of this one?
Yeah, it could be a good quality stock from a long-term play, and I think you should probably try and take advantage of this phase of the market correction to try and buy these stocks. So I think stock is at 740 levels, and apparently the stock has changed its beta nature significantly. I remember a point where IRCTC was a very high beta stock, and it used to move in swings of 30-40% in a matter of few weeks or a few months. So at least that is now behind IRCTC in terms of the price characteristic. So I would believe a buy and dips approach starting from current levels of 740 could be a better approach for the stock.
All right, so that is all about IRCTC. Any views that you have actually, Rajesh, on IRCTC? Because what Devappa has also mentioned is the fact that any other undervalued stock that he can look at apart from IRCTC then.
See, we are very bullish on IRCTC. All the divisions, be it ticketing, rail near, tourism, all are doing very well. And I think it's one of the monopoly business which is cash positive, doing very well for the new launches of Vande Bharat and all are very beneficial to IRCTC. They have tied up with Zomato, gone for a full coach booking, gone for outside catering also. So I think at these levels around 740, 750 odd levels, IRCTC a good buy for a 1 year time horizon. And as far as undervalued stocks are concerned, after this kind of massive correction which we have seen, there are a lot of stocks which are available at a good price. To name a few, one can have a look at Coal India, APJ, Surendra Park Hotels, PCBL, as I said earlier, IRCTC. These are some of the names which we have been recommending to our clients.
Right then, Kunal, I'll come right back to you with the next one because Vignesh is also writing to us from Bengaluru, wants to know if it's a good time to enter NTPC and NTPC Green. What do you make of this?
So NTPC Green I would not comment on because of the lack of data the stock has in terms of price history. But NTPC, I definitely believe so because the stock has come back into a 20% plus kind of a correction. I think from 450 levels thereabout towards almost 310, 312 where the stock is trading. So it's a decent correction for a stock like NTPC in this last 4-5 months of this market correction. And the good part is that the stock is now just about trying to get back into a time-wise consolidation. So for the last 2 weeks, in fact 2 weeks back, the stock made a low of 296 approximately. And in this phase where the index has been making new lows, the stock has apparently made a higher low of 312, 13 so far, for NTPC. So I think relatively the stock is going through time-wise consolidation. I think 300 should be a good pivot point for you to look to buy or average the stock from long-term play.
All right, so that's the take coming in on both of these counters. Let me take this next one that I have. Is coming from Vijay. He's writing from Chennai. He's saying he can invest 1 lakh rupees each in DRL and Hero MotoCorp at current levels. Should he go ahead and do that or wait for further downside or look to buy partially? What sort of a strategy? Kunal.
So good prices and good news of course never comes at the same time. Yes, the news flow into these stocks could be a bit negative from a short-term play, and that's why you've seen the prices also being very, very sharply negative for these stocks. But there's bound to be a point where these stocks come back into deep oversold territory. Just look at the charts for Hero MotoCorp, for example. I was looking at the last weekly performance. I think for the last 16 or 17 weeks, the stock has given consistent negative price close, and that's a very rare kind of an instance. And we've seen that whenever stocks fall in such kind of a sharp manner, they eventually come back into top contra buys zones, and especially for top quality names like Hero MotoCorp from the entire auto pack. So I would believe that Hero MotoCorp, Dr. Reddy, I think they should be in your buy list if you're a long-term player, and I think this opportunity of 30-40% plus kind of a correction to these names should be taken with both hands.
Alright, then those are 2 long-term plays that you should be considering. But time for a very quick breather on the show. When we come back, time to take more stock-related queries. So see you on the other side of that short break.
Welcome back. You're watching bnsn on ET Now, show where we get your answers for all of your stock-related query. Yes, the markets actually over the last few minutes, take a look at Sensex and Nifty. A sharp spike underway. When you talk about the benchmark indices, we are actually near the day's highest point, if I'm not mistaken. When you talk, yes, around the day's highest point at this for the benchmark indices. Let's take a look at broader markets. Have they recovered? Any respite coming in for the broader markets? Remember, small cap index and mid cap index have been under pressure, and they continue to be under pressure. Actually, mid cap index is still down in excess of 1%, and you have small cap index around 3.5% downtick coming in for that one as well. It is Nifty Bank that is actually outperforming, and marginal outperformance from Nifty Bank, 1.8% uptick for Nifty Bank. Remember that your top gainers on the Nifty are from the private sector bank today. So yes, private sector banks and banks in particular having a great day. But Kunal, you have a lot of people's portfolio that has not been having a great time, given the fact that you have seen a sharp correction coming in the broader market. So this query is coming from Dr. Subaya, who's writing to us from Tamil Nadu. And he's saying that, and I'll read the way he's actually written the query. He's saying, I have a long list of good quality mid-cap and small number of small caps, apart from large cap stocks in my portfolio. I was having good profits so far, but now started to realize big losses like many others too. So now that the current situation seems to be pessimistic for the short term, should I sell these stocks and buy it later when the market recovers, or just hold on to it till budget impact gets materialized? What should he do?
I think it's a fantastic question, and I think it's come.
This question, I'm sure a lot of them want to type, but are just refraining from because they're worried about the way the markets are headed, or the way markets are functioning, right?
Well, absolutely, yes, and undoubtedly. And I think, it's a very pertinent kind of a question, this kind of a market. Now, we've gone through, or we've seen cycles over the last 20 years, 25 years for the indices, and in every cycle, there comes a point where, the markets go into a phase of correction, like what we're seeing right now. What you mentioned specifically about your construction of portfolio, if I can understand very clearly, that you have more bent towards large cap names and you have a very smaller bent towards small caps and mid caps. In this phase of the market correction, yes, even the last 3-4 weeks, we've seen many of the large caps falling very sharply, and those are formidable large cap names. But that's how the market construct or the sell-off, the structure of a sell-off generally pans out. Eventually, it's these large cap names which will solidify your portfolio. And whenever the markets get back into their, on their feet and on a recovery mode, it's the large caps which becomes the darlings first for the market. So you always have to understand that if your bent is more towards large cap names, you are relatively shielded and there is a higher degree of a potential outperformance which could be set in on your portfolio. So it's a matter of time. Whenever the markets get back into a recovery, it's not as if that we'll keep on falling consistently forever for the indices. There is bound to be a point where the index would become oversold, valuations would etc. become start to look a lot more positive. And then I think once the phase of the recovery starts off, it's the large cap names which would keep on outperforming. And I think that sense, your portfolio construct looks to be quite apt. I would suggest a hold.
Rather than that's a take coming in as far as the market construct is concerned. But the next one that we have, Rajesh, is coming in on IDFC First Bank. In fact, we have a couple of queries coming in on this particular counter. We have a query from R. Ganesh writing to us about a fresh buy. And we also have Girish Kavle who's writing to us about the 250 shares that he's holding on to. Buy price for 62 rupees. What do you make of this counter on both counts then?
See, anybody holding the stock can continue to hold, but fresh buying is not advised at this point of time because of various reasons. Yes, we cannot deny the fact that the bank has started performing well in the last 2-3 quarters. The numbers have improved. But when I look at the valuation and the peer group stocks, we can find many good names trading at a good discount to their 52-week highs, and there are better opportunities there in the market, maybe a Kotak Bank or a HDFC Bank in the large cap names, or even in the mid cap names, you have the likes of Bank of Baroda or a Bank of Maharashtra, which can give better returns than what IDFC Bank can. So if somebody wants to put new money, these are the names we will watch for.
All right, let me take this next query then, and this one is coming in from Subrata Mukherjee. In fact, we did have Rajesh already talk about BEL and BEML at the start of the show when we did speak about defense space. But Kunal, talking about defense space, especially BEL, Subrata wants to know, should he look to buy a BEL, not BEML, BEL today as a budget bet?
Well,
make sense?
I think it doesn't make sense, and refrain from doing that.
Right.
Because I think in this kind of a sell-off, all you have to look out for is that try and construct your portfolio quite aptly, because if you get the, for example, we discuss about asset allocation points. So if you get your asset allocation right, if you get your stocks and your portfolio construct right, that's all what matters. These events which play out, they are 50-50. What if something negative comes out, or maybe not as per the expectations for the market with respect to any of the sectors or individual stocks which you take a bet on. So I think rather than doing that and being disappointed at the end of the day, I think it's always very important to try and find out those major points where you can start looking at constructing a portfolio rather than betting on events. I would suggest not to play out with the budget event on specific stocks, at least as of now.
Alright, then that's a take coming in as far as BEL then is concerned. We also have Dr. Ravi writing to us from Bengaluru, Rajesh. He wants to know about Dixon Technologies. Is it a good time to invest for a 1-year horizon then?
See, I've been very vocal from the past few months that though the company is doing very well, they have got good orders, they have recent tie-up for a fabrication of semiconductors, but still the valuations are at 3-digit P, which is not sustainable. And I still think that after these kind of correction also, there might be some amount of bounce back. But fundamentally, it's very high value. Valuations are very high. One should refrain from buying at this point of time. Maybe after some amount of correction or the numbers improve drastically, then one can think of it. But at this point of time, valuations are very stretched.
All right, that's the take coming in on Dixon Tech. Let me take this next query then, and this one is coming in from our viewer. Not mention the name, wants to invest some lump sum amount, Kunal, in the market right now. 3 to 4 stocks, wants to know about 3 to 4 stocks in some about 3 sectors, banking, pharma, IT, maybe one each, which he can look at actually buying right now.
So banking, IT and not pharma, but I would probably believe maybe auto stocks could be something which you can look out for, because eventually I think these are the top heavyweight amongst the top heavyweight sectors for the Nifty 50. And even if you're looking at this on an individual basis, for example, I think Kotak Bank, HDFC Bank and ICICI Bank, I think these three stocks are amongst the best placed from the private sector banking stocks. From the auto pack, you can look at Eicher Motors, M&M in their respective two-wheeler, four-wheeler category. I think these stocks are doing exceptionally well. Tata Motors at some point of time would start to look very lucrative and attractive, especially around the 700 mark. So that's something which you can look out for from a better risk reward perspective. So I think sticking to large cap names, that would be point number one which you can look out for, and then trying to look out for stocks with a balance where you find stocks which are strong sector leaders in terms of price performance as of now, as well as trying to find the stocks which were erstwhile sector leaders, but they are available at a 40%, 35, 40% kind of a discount. I think having a mix of the strategy could be very good for your construction portfolio and the allocation of capital which you're looking out for.
All right, then the next one that we have, in fact, is coming in on Hudco. Rajesh, we have Rohit who's writing to us, long-term investor. In fact, tell you what, let's take the next one actually, Rajesh, because we also have Vidya writing to us from Bengaluru, wants to know about Bajaj Housing Finance. Now, the shares were allotted to her in the IPO. She wants to know if it's a good time to add at this point.
See, the company is very good. The AUM has increased by a very rapid pace in the last few years. The numbers have been good, but still when we are compared to other housing finance company, maybe a LIC Housing Finance or a Canfin Homes, they are better placed than what Bajaj Housing Finance in terms of valuation. So if somebody wants to put new money, I would say go for LIC Housing Finance, which is trading at a very good valuation. The numbers are good, have a good parentage. Even the disbursement and advances have been growing. So LIC Housing Finance is a better place than Bajaj Housing Finance. But Bajaj Housing Finance is also good, but if it corrects by around another 10-15%, then it may be a buy.
Kunal, this one is coming from Deepak. He's writing to us from Santiago, and he's writing after a while. He wants your view on Abbott India. He wants to know, is it a time to start buying and accumulating it for the long term, since the stock is coming out of F&O in the month of February? So will that be better for the stock and for people who believe in investing it, or will it correct?
Yeah, I think Abbott has been one of the classic compounders over the last decades, a couple of decades. I remember, I think the stock, I think 2010 somewhere was almost at 700 rupees thereabout, and it's moved on to the clubs of 30,000 plus in the last 10-15 years. Yes, right now the stock in this month has gone through the first phase of correction, but the only catch what I see when I look at the charts for Abbott is that the stock generally, when it goes into a correction, goes into 2 successive months of price correction first before it tries to come back into a recovery phase. So this 25,000 mark thereabouts for Abbott could be a good level, but I would just wait out for maybe one more month in case if the stock drops down, say another 2-3,000 points. That could be another level where you can look to average further. So maybe accumulate 40-50%, 60% of your capital at current levels, but keep some powder dry in case if the stock corrects in the next month.
All right, then that's a take coming in as far as Abbott India then is concerned. Rajesh, I'll come right back to you because S. Janardhanan is writing to us from Chennai. He wants to know about NCC 100 stocks. Buy price is 146 rupees. What do you make of this one then?
See, good company with a good order book. The kind of construction and infrastructure activities going to Telangana region is a very big positive for this. One can continue to hold, and if it falls to around below 200 levels, one can even add. But at this point of time, it's a hold from our side.
All right, so that's the take coming in on NCC. On that note, we'll slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. The next one that we actually have is coming in on Tejas Networks. Kunal, 100 shares. Buy price is 1,150 rupees. And this is the one that is coming in from Thomas George, writing to us from Chennai. Wants to know if we can add a little more at this point.
So my only advice would be that if you're looking to add the stock, just add it for a trading bounce rather than any kind of a major V-shaped recovery into the stock, because what's happened is the stock is now almost 400 points below its 200 moving average. The 200 DMA is placed at 12, 20, 30 thereabouts for the stock, and the stock is at 830 thereabouts. So which means that this divergence which is creeped into the stock, that divergence could get narrowed. You might probably expect the stock to come back towards say 880, 920 kind of a zone. That could be a zone where you may look to book out your profits. But I would just advise that keep it more towards trading bet rather than any kind of a major long-term portfolio holding which you want to do for the stock.
All right, so that's the take coming in on Tejas Networks. What about BHEL? How the future of this one is looking like, Kunal? Manoj wants to know. 250 is the buy price, 500 shares.
So I think it's an excellent chart for BHEL. Yes, the stock has fallen very sharply, like many of the PSUs have over the last 6 odd months. I think the stock was almost at 330 thereabouts, has fallen to 180, 190 levels approximately. But I think at current levels, the risk reward is strongly in favor for traders with a longer term time frame. So I would suggest BHEL to be a hold as well as an add at current levels.
All right, then Rajesh, the next one that we have is coming in from Kuldeep. He's writing to us about CDSL, actually 205 shares, buy price is 1,422 rupees. What do you think about this one, hold or sell at this point?
Company has seen a massive cut in the last few trading sessions, but we should not forget the kind of number of additions of clients in the DP, the number of IPOs which are coming in, which would be beneficial to companies like CDSL. Somebody considering a long-term hold in the stock, it's a very good opportunity to buy, I would say. So if you're holding, continue to hold. If your funds allow, you can even add.
All right, so that's the take coming in on CDSL. Let me take this next query then, and this one is coming in from Shrikant from Hyderabad. Zomato, 2,000 shares at 68 rupees. Birlasoft, 300 shares at 450. IREDA, about 450 shares at a price of 32 rupees per share. He wants to hold on for more than 5 years. Actually, I'll not take it to Kunal, I'll take it to Rajesh because it's 5 years time horizon. What sort of a strategy should he use? Because talking about IREDA, talking about Zomato, definitely in heavy set of profit is where he's sitting at. Not sure about Birlasoft. Birlasoft buy price was 450 rupees per share. Rajesh, what's the take? For the next 5 years, stay put, don't do anything, or do you think add some more?
See, I think Zomato, one should consider trying booking profit at these levels because although the numbers were okay, I would say the EBITDA fell because of addition of dark stores. And I don't find any reason to believe that the numbers are going to be anything better because they had a target of adding 2,000 odd store by 2026 and now they are talking about 2025. So that would again take a pressure on the numbers. The number would be in pressure. Valuations are stretched. So it's going to be prudent to book some profit in Zomato. As far as IREDA is concerned, one can consider, one can continue to hold because of the fact that the government's focus in renewable energy and all. And this company is into renewable financing. Birlasoft, yes, the projects are doing very well. These valuations are good. If somebody wants to add, one can add.
All right, the next one that we actually have, Kunal, is coming in from Nikhil Sharma, writing to us from Mumbai. He wants to know about a couple of counters. Now, Axis Bank and Tata Power are the ones that he's looking at. For Axis Bank, he has 20 shares. Buy price is 1,157 rupees. And even for Tata Power, he has 40 shares. 448 rupees is the buy price. So what are you looking at when it comes to both of these counters?
So good stocks, both of them, Axis Bank as well as Tata Power. And I think the best part is that both of these stocks have gone through their individual phases of correction. Tata Power specifically from those, I think 475 levels thereabouts. So the stock has come back towards 340, 350, and Axis Bank has also come back sub the 1,000 mark. So I believe that both of these stocks are attractive from a long-term play. Continue to hold on as well as look to even average further at current levels.
All right, this next one is coming in from Sam. He's writing from Bangalore. Kunal, he wants to know about Motilal Oswal, 800 shares at a price of 760. Wants to know what's the stop loss for this one for a period of about a year or so?
So I think the ideal stop loss for the stock was around the 730, 740 mark, which also coincided with the 200 DMA for the stock. But I think at current levels, it looks like that the indicators are getting into a deep oversold territory for the stock. You may expect the stock to bounce back over the near term. So I believe that maybe there could be an opportunity where the stock may come back towards 700, 710 levels. That could be a point where you may look to exit the trade.
All right, Rajesh, the next one that we have is coming in from K. Nagraj. Wants to know about a couple of counters. Now, he wants to know about Biocon at this point. Buy price was 301 rupees for him. And Natco Pharma as well. He's not mentioned how many shares he's holding on to or his buy price, but he's saying that he's sitting at a profit of say about 20%. So what do you make of both of these counters? 50 shares is what he purchased for both of these actually.
Time is not a consideration, and you are not in requirement of any funds at this point of time. I think you can continue to hold. Both the companies have good product profile. They're doing very well. Biocon has started giving good numbers. Natco, as it is into oncology, is doing very well. Today, there has been a sharp cut in pharma stocks, especially Biocon, but these are temporary, I would say. For long-term investors, these are opportunities to accumulate. So stay put with your holdings, I would say.
Is coming from viewer, the name is not shared, wants to know about Jio Finance. The 500 shares purchased are about 330 rupees per share. Kunal, what's your take coming in on this particular counter, especially for a period of about 3 years or so? Do you think the tide is turning, at least for the benefit for Jio Finance? A sharp correction in 3 months. Do you think some more in store?
Yeah, some more in store. Looks like that the stock has come back into a very sharp corrective phase. Now, the point over here for Jio Finance, when you look at the charts, is that it's fallen almost 100 points below its long-term average. So from 330 to almost 230 levels. So which means that intermittent, you might probably expect the stock to get back into a bounce. But after the bounce, I think the stock should go into a double test of its support, which should be at the 230 levels. My sense is that maybe a near-term bottom or a major bottom could happen once the stock completes the corrective phase around the 220 mark or sub 220 levels. That could be a process which could take maybe another 1 month, 1.5 or 2 months for Jio Finance. So if you're not in a hurry, I think you can continue to hold on, but I think averaging out should be done sub the 220 levels.
Alright, then that's a take coming in as far as Jio Financial Services then is concerned. Kunal as well as Rajesh, thank you so much for taking time out and joining us and answering all of those queries. But those were all the queries that we could pack for you on this show. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.